Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here, Jim. Thank you for having me.
Do we have a special offer for our listeners?
Yeah, let's do it. For those who want to try out Leibovit VR newsletters, you go to VR. The shortcut is go to VRTrader.com. That's Victor Robert, VRTrader.com. VR stands for, by the way, my technical indicator, the volume reversal, which is part and parcel to my analysis, trying to pick, change points in the market based on volume. But anyway, VRTrader.com, and then if you go to any of the newsletters and you get to the promo code section where you enter your order, simply enter 2021 half off, 2021 HALF, just as it sounds, and you get 50% off whether you sign up for a monthly, quarterly, or annual subscription. That's 2021 half off at VRTrader.com.
Mark, the official inflation rate from both the U.S. and Canadian governments, over 5%. In real terms, if you bring in fuel and housing costs, isn't it more like 9 or 10?
Yeah, it's funny how they exclude certain things from the calculations, isn't it?
Well, obviously, they have a reason. They don't want inflation to look as bad as it is.
But it's always been this way. They selectively, don't they also eliminate food, right?
I don't think they count taxes. And they move the food index around. Before, it used to be the cost of steak. Now I think it's the cost of the cheapest batch of hamburger.
So when you play with the numbers, this is why I never, and anyone should never really believe any government report. I mean, it's all, anything we get, like we get stories about every economic indicator and report, and we're listening all day long. This economic report came out from the Labor Department or from the Commerce Department or even reports from the Federal Reserve. I mean, I never really believe any of this stuff because you don't know what's really true or not. You're just being told what it is. And, in the background, who knows what's going on, manipulating the numbers for political purposes or because they really are trying to mislead everybody about what's really happening. So, honestly, it's a terrible environment we're in, particularly with, economists and legitimate analysts, trying to get a real picture of what's going on. You got to do independent studies. There are some economists that do independent studies and try to analyze what's happening. In many instances, they do come up with completely different numbers. But the press, general liberal press, the pro-government press, just reports all this stuff. And do they ever question it? Like we're questioning it now. They say, this is the report came out at 5, but shouldn't it really be 9 or 10? You're not taking consideration these other things. You don't even hear that on the financial networks or in the newspapers. At least I don't see it that often. So anyway, the question is, what does it all mean? Mm-hmm. I mean, are the money managers just responding to the fake numbers? Or, do they really know it's fake and they're acting differently? Or they don't pay attention to it at all? I mean, you gotta make your own decisions here. I think the point you made was a very good one. I mean, common sense. Assuming people even invest this way, do you think the average person's walking around the street thinking that the number is 5%? I mean, they're more concerned that the gasoline price went up, like you said, or their food bills are going up, and many struggle to pay their bills. So it's really a difficult, situation. I guess here we're talking about the market and investing. So if we really believe that numbers are false, we have to invest accordingly and realize that things are going to, they're not going to be what they tell us it's going to be. Crude oil, they're telling us it's too high or can't go to this number, and we were talking off air about how it can go even much higher. So I think the average person realizes that. They just don't talk about it, and I think you got to ignore what you hear in the financial reporting world.
Yeah, we've talked to John Williams, who publishes what he calls shadow stats that try to capture real inflation instead of what the government claims it is.
Right. That was the name I was searching for a moment ago, and I forgot it was Williams. I sort of thought Williams. I didn't want to say, yeah, he does terrific work.
Yeah, just remember Star Wars. Not that John Williams, the other one.
Yeah, not the one who did the musical score, right?
Yeah, and with inflation too, and I'm sure the government isn't counting it. When we talked yesterday with Wolf Richter from Wolf Street, he was mentioning used vehicles in the U.S. Some have jumped 45% in price in the past year. In some cases, people are paying more for a used truck than a new one.
I just got a bid. In fact, it's funny you should mention it. I drive a Jeep Grand Cherokee, and it's 3 years old. And I went into the local Jeep dealer, this was 2 days ago, just to get an idea of what was going on. I mean, I thought the thing was worth maybe 17 or 18,000, and they gave me a bid of 24,000 for it, and that's the dealer. That's not, I guess what they would sell it for. And I paid the low 30s for it 3 years ago. So, it was definitely $5,000 or $6,000 more than I think it was worth, based on a normal market. So what you say is absolutely true. Plus, I have another friend here in Phoenix who's in the car business, and he's getting into or just bought into a Canadian import business, bringing cars in from Canada. And I said, are you doing this because of the car shortage? He says, no, there's 20 to 30,000 Canadian cars coming into the U.S. every year, and there's a lot of money to be made brokering these things. And I'm guessing, maybe it's cheaper to bring it in from Canada, and they make more money on the spread. So there's a lot of interesting stuff going on in that used car thing. But the consensus view that I hear from those in the street about it is that this is temporary, that 6 months from now you're not going to see the same nonsense going on. But we also know, I just rented a car. I was driving cross country, as you know. And you can't even rent cars. I dropped off my car rental a couple of days ago. There was not one car in the lot available to rent. And part of this is because, as you know, the car companies sold off their fleets, didn't buy them back, and then just a tremendous demand for rentals because the shortage of cars around that they can't even keep. You try to call Avis or Hertz or Enterprise or Budget. Budget Avis is one company now. You have difficulty getting cars. It's a zoo out there.
Yeah, who thought that old Chevy you kept on the back 40 might be worth something these days?
Yeah, I regret selling any of my used cars. I should have kept them all in the garage.
Now, the last time we saw rampant inflation like this, and I think President Trump brought it up, he said if inflation is running away like this, we could see a return to the late 70s where interest rates hit 21%. Do you think that'll happen?
Anything is possible, Jim. We run in big cycles, up and down, panic, and, different levels of panic, upside, downside, panic, enthusiasm, despair, the whole cyclical sphere there. So I don't know. Anything's possible. Could happen. I mean, went to zero. Nobody ever thought we'd go to zero or minus, which happened, which as we know happened. Academics, if you mentioned this 10 or 15 years ago, they'd laugh at you. That's impossible. So the fact that it occurred means it probably can happen again. So I would not discount that, and that could be a risk in the next couple, 3, 4 years that we could see a surge in rates where it goes back to that 21, but it could easily go up. And the way they're printing money and the way the government wants to subsidize everyone here, they're talking some legislation here in the U.S. about everybody getting $18,000 a year free from the government, and you don't have to work, and the government takes care of you. What does that do to the money? The value of the dollar and interest rates and the value of money. I mean, it's going to be wild out there. So you got to be prepared for this insanity ruling in our governments right now. They're doing unbelievably stupid things. We're saying stupid things, and there's going to be consequences for that. And I don't know what the street's going to look like. I guess if you're retired and you get 21% on your money, that would be great for the retirees who, as you know, have been able to get any yield on their money in the last few years. So I guess for the retirees it would be good. But what's the value of the assets and everything else at that time? That's really going to be interesting.
And who can afford to buy a house with a 21% mortgage?
Right. Well, I remember when it was really high in years past, the buyers and the sellers would cut a private deal on there'd be like a seller financing, and they would strike a number that was less. I remember some transactions that took place at 11% versus the 18 to 20% because the buyer and seller negotiated something privately. Yeah, you probably see stuff like that happening.
With pension funds receiving so little in the way of interest and inflation running at over 5% officially, what's going to happen to pension funds and the people who rely on them?
You know, this was an interesting point. I mean, the last, 2, 3, 4 years, the theory was being bandied about that these pension funds, can go under because they're not generating the yield that they need for their beneficiaries. And interest rates had to go up, and the government had to do something to bail out and protect the pension funds. So maybe they just got all invested in the stock market, and the plunge protection team and all the powers that be just got the stock market going to the moon. So the pensions are making money on their stock portfolios, and obviously they're not making it on their bond portfolios. But there was a theory for a while, and it'll be interesting to see if that comes back into fruition. We were just talking about higher rates, that we needed higher rates to save the pension funds so they can guarantee a certain base rate return to their clientele. So that didn't happen. We went to zero rates, or they're still down. So we have to, and many of the retirement funds are still in existence. So I can only bet that it's because their stock portfolios went up.
We'll have more with Mark Leibovit right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's going on with the U.S. dollar?
Well, it's trying to rally a little bit, which has been frustrating to the bears. There's no reason why fundamentally it should, but it's hanging up there right near recovery highs the last, I would say, 5 to 10 trading days. I track UUP, which is the ETF for the U.S. dollar. It just seems to be in a little uptrend, and hasn't broken out yet or anything. I don't want to get too excited about it, but it's still way down there, and it could, in theory, continue to rally. So you got to watch it here because everybody was bearish on it. Of course, for good reason. I mean, money being printed like crazy people running the U.S. Treasury like Janet Yellen, and the Federal Reserve being run by Powell, who seems to ignore the fact that there's inflation out there and keeps saying there's no problem with inflation, it's going to go away. So, the dollar, at some point, fundamentally should be, lower, and I think a bear case, makes sense, but the charts are saying that it's been trying to hold up here and rally, and you just gotta watch that, because obviously that doesn't help commodity prices, particularly if you're trading gold and commodities, and, it's just, so my gut feeling is, about it, that it's still trying to rally, but I'm not jumping in and buying it because the fundamentals are so negative against it. So if I see a trade in it, like there was a few days ago for a quick in and out for a couple of days, I might do it. But, my gut feeling says, why should the dollar go up?
Cryptocurrency. What's going on with Bitcoin and all the other coins?
A lot of fun there. It's a lot of fun. I'm glad you brought that one up. I mean, the smartest people I know are saying they're happy that Bitcoin is down because they're going to accumulate and dollar cost average all the way down. They have this view. It may be correct. I mean, look, it worked out before, when it would go to 20,000 and then it went to 2,000 and now it went to 60,000. Now it's gone from 60,000 back to 1,000. Maybe it's some of the charts say go to 18,000. I know now we're just talking Bitcoin, of course. There's 7,000 current cryptos out there. So, we could talk about a lot of different other ones, but, the smartest people are saying, no, let it go down. I'm just going to accumulate in my long-term portfolio, my 5 or 10 year portfolio. And, there are people out there, I don't want to mention names, that I've heard and had respected because they had called the big bottom in Bitcoin a few years ago when everybody else was bearish, and they were bullish again after the big correction. And they're talking numbers like 500,000 to 1 million for a Bitcoin. And just keep in mind, it only got to 60,000 on this current rally. And these are some of the people who are calling it at the very bottom when it was $10, $20, $100 a coin. So either they're smoking something, or they really know something we don't know. So part of me, technically, it's in a downtrend now. I haven't seen a reversal yet saying it's time to jump in. That could happen 2 days from now or not. It could happen from 18,000, which is $12,000 lower in Bitcoin, or it could come from here. At the moment, we're in a correction, so we have to watch. But it's just sort of interesting that, there's still a view out there that there's a bunch of people who say it's worth, who said it was worthless from day one. I mean, they would never buy it. It was worthless. It's going to go to zero. Never did. And some people are still saying it's going to go to zero. There are others are saying, no, this correction could be, if you dollar cost average, it could be a buying opportunity. Part of the correction in Bitcoin, Jim, as you know, is because of China, and they didn't like the idea that all the energy was being used, recently to mine for these coins. There was, some statistic, I think we mentioned this on the show before, that it takes as much energy to run the country of Argentina as it does to mine for Bitcoin. So it's an energy usurper. And some are saying, well, no, now these people are mining in green. They're doing it energy efficiently, and they're doing it outside of China, and it isn't as expensive. And even Elon Musk, remember, he didn't want to use Bitcoin because it wasn't a green favorable coin because of the mining costs and running these huge computer banks, with a lot of electricity. Which, by the way, is all unique to Bitcoin. Those other cryptos don't have that problem. It's just a Bitcoin phenomenon, but then Elon changed his mind. He said, no, I'll handle Bitcoin again if they mine it green, they do it in a energy saving or efficient manner, and they don't use a lot of electricity. So a lot of cross currents here. So I'm trading, I'm not in it at the moment. I've been watching it. And my gut feeling is if you have another big washout in it, and it does get down to about 18,000, which is a big number on the chart, and I'm not predicting it'll get there, but that might be a hell of a point to buy it. So, meanwhile, the other coins are doing their own thing, XRP, the Dogecoin, lovingly referred to as the doggy coin that Elon Musk was behind. And, so many others out there, are tradable, but they all are sort of following the short-term pattern. They're in a correction here. So we're going to have to wait and see when we get a signal for a bottom. I'm bullish on cryptos. I mean, that's the future. I mean, there's no question about it. It's, countries are accepting it. Currencies are moving to digital format. So whether, you just have to watch for a trading opportunity if you want to get into these things. And if you're some of the people that believe big picture, like the Bitcoin is going to 500,000, then you slowly accumulate this stuff as it goes down. And you got to think of it like a cheap stock. If you buy a crypto currency like XRP, which I think is trading around 59 or 60 cents for the coin. It was as high as $1.70 just a few weeks ago. Maybe it gets down to 20 or 30 cents. You buy it and just put it away. I mean, it's like an option that doesn't expire, or like buying a penny stock at 20 cents and just saying, well, I got 20 cents in it and I can afford to lose that, and I'm just going to buy it and hold it and see if it works out. I mean, that's an investment or trading strategy for some. So, that's sort of mine. I mean, if they really get down that low and Bitcoin gets to 18,000 and, XRP gets to 20 or 30 cents and doggy coin, I think it's around, I keep saying doggy because of all the doggy pictures, it's Dogecoin, and it gets, under, where is it now, 19 cents, it gets, under a penny, and it was trading under a penny for a while, then maybe it's worth a shot. So, a lot of fun stuff out there talking about the crypto world.
For people who keep track of geocosmic events and investments, just a heads up here, a friend of yours, Ray Merriman, who deals with that, he'll be on This Week in Money, and he was saying it works so well for him, and you're kind of a fan of that as well.
Yeah, I love Ray's work. He's doing more than geocosmic. He's doing financial astrology, and he's one of the leading people in the world that does this. I've known Ray, it's got to be 40 years. He originally started the gold, analyzing the gold market. I get his letter all the time. I don't understand financial astrology. I know some of it because I've been reading it for so many years. I don't really use it per se, but he makes some very interesting calls based on the positions of the planets. My orientation, as you know, has been more in the lunar cycles that I got indoctrinated with many years ago when I was a floor trader, and one of those floor traders came up to me, and I've told the story many times how he predicted a change in the market based on a shift in the moon and a lunar cycle, and then Ian McAvity influencing me, the Toronto-based newsletter writer from his product Deliberations back in the 1970s, talking about the correlation between the moon and gold hitting highs or gold hitting lows. So it's all like lunar related is more my orientation. But I read Ray's stuff, and it's like anything else. You got to put all the pieces together. It's like me looking. It's like the weatherman story. I keep saying the same thing. A weatherman can make a forecast and put all the data together, but before he goes on the air, he looks out the window. You know what I mean? Because the short-term stuff, the long-term picture, or the position of the low and high pressure systems and all the other stuff you're looking at on the chart may be great, but if it's calling for clear weather and you see a storm coming in when you open your window, obviously you misanalyze. So I think it's the same thing with financial astrology and technical analysis, which I use, and the lunar cycle. You got to put it all together. So if a financial astrologer is telling you the market looks bad and the technical indicators are turning south on your chart and volume is coming into the downside, this is what I do. I try to put all the pieces together. So my cyclical work for my own work is negative now, and we'll see if it just for a few weeks or a few days, and you just go with that because the volume and the price action seek to telling you that things are negative short term. Your cycle work is saying negative, so you put all the pieces together, and then when things don't work and they don't pan out, then you misanalyze and you have to adjust your trading strategy. But you definitely want to use all this stuff, is basically what I'm saying. Use any resource you can, geocosmic, financial astrology, listen to the financial news networks and Jim Cramer, and then you put all your pieces together and try to come up with a strategy that works for you. I have mine, and it combines a lot of these elements, and you got to be you got to be open-minded, because it's just not one thing that moves the stock market or moves commodities.
Mark, thank you so much for chatting with us.
Thanks for having me. Great to be here.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.